webinar series called Power Tools for Webinars for Coalitions. I am Kinkini Banerjee, the Coalitions Relations Manager at USBC. And in the year that I've been with USBC, I've had the opportunity to connect with coalition leaders in almost every state and territory across our country. And I'm inspired by the committed volunteer base that holds your coalitions together. And as we work together, coordinating and collectively scaling our efforts for better breastfeeding outcomes through national, statewide, and local efforts, we all recognize the need for a more robust infrastructure for breastfeeding coalitions, which will allow better partnership and funding opportunities. So I'm really glad to introduce this new series of bi-monthly webinars, which will be part of USBC's training, technical assistance, and capacity building support for network of all coalitions, state, territorial, tribal, and local community breastfeeding across the country. So the access for these webinars are open to all coalition leaders and members, and you can sign up for our webinar announcements through our coalition announcement list, and you can join at www.usbreastfeeding.org/signup. And all these sessions will be recorded and archived, so you can revisit them, you can download the materials and share them with your peers and colleagues who might not be able to join us today. All the details and handouts and archives, recordings of these will be on our Power Tools webinar webpage called www.usbreastfeeding.org/powertools. And your follow-up email will also give you the link to this page, so you can go back there and access the materials as well. So some housekeeping, quick housekeeping for today's session. All attendees are in listen-only mode, but we encourage your questions, so do type them in the chat box or question box on your webinar control panel, and I'll show you how that's done. So you on the right side on your webinar control panel, if you should see a panel. If you don't, you can click on the orange tab and it'll pop right back out. So just under the poll section is a section called the questions. If you click on that section, you can, a dialog box will open up and it allows you to type in your question. So you can do so anytime during the session, and both Megan and I will moderate and make sure that your questions get answered. So if you have any audio or technical problems during this session, please email office@usbreastfeeding.org. And with that, we come to today's session. And our first session is Navigating the Nonprofit Startup. I'm delighted to introduce Megan Renner, the Executive Director of USBC, and Megan is the guru of nonprofits. So we couldn't have had a better way to start this series than to have all this, the expertise, the wisdom, and all the experience that Megan has had with nonprofits to be able to put this into the series for all of us to benefit from. So without any further ado, I'm going to turn it over to Megan.
Thank you, Kinkini, and hello, everyone, and happy spring. I hope that it is turning into a little bit more of a springy situation in everyone's locales. I know we have folks from all across the country today. And as Kinkini said, we are so excited to be launching this webinar series. It has been many, many years in the thought process and the fruition, and we're very excited to finally have the capacity to really put forward a series that will be able to address some topics that we know and we have heard have been on the minds of many of you. So just by way of a little bit of background and context setting, you know, what has brought us here. So as many of you know, back in 2006, USBC hosted the first ever national conference of state breastfeeding coalitions, and we had coalition leaders from 48 states, By 2008, we had all 50 states. 2010, 2012, and beyond, the breadth of that representation has continued to grow to include tribal and territorial, and we know there's many local and community coalitions beyond that as well. As a result of that first conference, the statewide coalitions were formed where they didn't previously exist and have been strengthened where they did. And so since that time, USBC has been funded by CDC to maintain the directory of the state coalitions, as well as to provide a variety of different programs, resources, training, and TA to the coalitions. So I put on here the Surgeon General's call to action cover as really a turning point we see in our ability to provide support for coalitions, because as you likely know, Action 20 called out and identified USBC and the state coalitions as leaders in the implementation of its 20 actions, and called specifically to increase the capacity of USBC and the state coalitions. And so as a result of that, you see I've also put the Kellogg Foundation up here because now the Kellogg Foundation has really, in partnership with CDC, helped us to expand our support for the coalition building functions that we provide. So as Kinkini mentioned a bit at the beginning, her position was able to be hired as a concentrated employee at USBC working on coalition support, and she's been doing so much great work with all of you, conducting the comprehensive needs assessment of all 50 states and doing some one-on-one work with many of you as well. And so that's given us a lot more information than we had before about where everyone is at, what you are struggling with, and really informed and fed into the design of this new webinar series, and what we felt would really need to be a separate series, because the reality is that not every state and not every organization serving breastfeeding around the country is at the same stage of development. So our typical webinar series that we do, the bi-monthly webinars co-hosted with CDC, we really try to have topics there that are universally applicable to everybody. And so some of these topics that we're going to do in the Power Tools series will be a little bit more specific. It might be relevant only to coalitions more in the startup phase, as we're starting with today. And then others might be more specific to coalitions that are having different types of development stages. It could be fundraising or communications, different things that we'll talk about in the future. And so the series will be a little bit more focused in on those operational capacity building components of being a coalition or a nonprofit organization supporting breastfeeding. And we'll be archiving these so that even if a coalition or an organization is not ready at the moment that the webinar happens to be engaging with that content, it will be archived and available on that Power Tools webpage for the time when they are. So today we are starting off with the startup topic, as we noted in the promotion, and have three different primary objectives that we'd like to talk about today. First off, filing with your state for your incorporation as a nonprofit. Then secondly, applying for exempt status with the IRS. And then thirdly, there's another component of early startup registration that is another requirement with the state for fundraising. I'm also going to throw in at the end some additional information about the 990, which is the annual information return that nonprofits file with the IRS. I'm going to do this on this webinar and actually move some of the greater detail on the state fundraising registration into the May topic, because that 990 deadline is for most organizations that have a December 31st deadline. It's May 15th. So the May webinar would be just a little bit too late to really engage with that topic. So I'm going to instead do some brief overview of the 990 and some highlights and places and key information that you need, so that there's plenty of time for those that might be doing that for the first time or realizing they need to do that for the first time. You'll have plenty of time between now and May to do that. So you'll see towards the end of the content portion of our webinar where I've put in some more information for you on that. So I'm going to start off with just some key background as well, key terms and distinctions. As we've said in the promotion, we really want to provide a few key power tools that can go a long way, projecting you to different resources that we've found to be very helpful and to sort of wade through all of the stuff that one might find on the internet around these topics. So wanted to start off first with just clearing up the misconception that we often hear that nonprofit status is not the same as tax-exempt status. And often these two terms are used interchangeably. They're closely related, of course, but they're typically done in different times, different orders. They're different government entities that oversee them. So your nonprofit status is actually granted by the state, and that comes first. And then sequentially, then later, you could also apply for tax-exempt designation, which is granted by the federal government and specifically the IRS. So the key distinction to make sure that we will be talking throughout this webinar about both of those processes, but they are quite different. So before we launch into how they are different, I want to do a quick poll of everyone on the call. So I'm going to launch this here in just a moment. So you should be viewing the poll now, and go ahead and click the button on your screen and let me know, what is your organization's current status? So the organization you are really here today to learn about. Is it informal, has never incorporated with the state? Are you perhaps incorporated with your state but have not yet received IRS tax exemption? Or you might have both, the incorporation in the state and the IRS tax exemption, or you might not be sure. So that's okay. I know sometimes this can also be confusing. And again, we'll hope that we can help everyone to better navigate that through the content today. So it looks like we have most of you in the first category, that's the informal, unincorporated, and a couple that are in the second two stages, or a smaller percentage of you in the second stages, and a few that are not sure. So wonderful. I'm going to go ahead and close that poll. Thank you, everybody. And you should be back to seeing the slides now. So to start off, we're going to do a little bit of discussion just about what it means to be a nonprofit, and then also what it means to be tax exempt. So what is a nonprofit? Any organization for which those who control or support it don't earn a profit is the standard definition of a nonprofit organization. But there is a myth that is very pervasive about nonprofits and whether they can earn a profit. The truth is that absolutely nonprofits can earn a profit, and many of them do, and we really hope that they should, in fact, because if they don't earn a profit and they continue to instead operate at a loss, they will eventually go out of business. So the reality is that profit is a good thing for nonprofits if they would like to grow and develop, and really to serve their purposes, they're going to need to earn a profit. And they can earn that either from providing goods or services to the public or different constituents that they might serve. Nonprofits can also invest in the stock market, and that's another way that many do. They might have endowments or investment accounts that allows them to earn some additional revenue that way. So if nonprofits can earn a profit, then what's the difference, you may be saying? Megan, that doesn't make any sense. So here's the key component that I've highlighted here in red. The difference is that those who control or support it, so that's the individual people who are typically the board of directors that are governing that organization, or the members or others in the universe, the donors, people that it serves that are supporting that organization, those individual people can't earn a profit. Only the organization can earn the profit. So all the money that is made, that profit has to go back into the organization. There's no profit sharing with individual members. There's no owners. There's no shareholders that you would typically talk about with a for-profit organization. So another piece of what that means in the law is that there are special rules around what happens to the organization's assets if that nonprofit ever terminates its existence or dissolves. And we'll see this in a couple of different places as we talk about these filing requirements. where there are special rules and things that a nonprofit needs to do to make sure that its profit or its assets will remain in the service of the purposes, those nonprofit purposes for which it was formed. So we'll talk about that a little bit later. And you may have also heard the term not-for-profit. This term has been bandied about and typically means the exact same thing as a nonprofit, but it's a way to differentiate this distinction a little bit better, to say that they can make a profit, but that's not their reason for being. So becoming a corporation is the most common choice for nonprofits. And again, it's something that happens according to your specific state's law. But there are some things that universally apply. So every nonprofit organization is going to have an organizing document that creates that organization, typically called the Articles of Incorporation, sometimes called the Charter. It will also have rules of operation that are typically called bylaws. And then it will also have policies that govern more into the details of how those bylaws are implemented. So I've put in here in brackets some handy terms that we talk about often at USBC to help us think about these different governing documents, because they really are a hierarchy. And so we often think about the Articles of Incorporation, that organizing founding document, as the constitution of the nonprofit. And then you can think about the bylaws as akin to when Congress passes a law or legislation. And then you can think about your policies of your nonprofit similar to once we pass a law in the United States, there's often a need for some implementing rules or regulations. And so that's something we in the breastfeeding community have been experiencing more in detail with, especially the nursing breaks law, the federal law that was passed, as well as the implementing rules and regulations around the Affordable Care Act. So that's something just to think about. Might be a helpful way to think about those different governing documents that you encounter. So some advantages to becoming an incorporated nonprofit. Perception is a key one. People are typically more familiar with a corporation. You'll be perceived as dependable. There's really a legal entity there that someone is doing business with once you are incorporated. You may need to be incorporated to contract directly with your state or other entities for which you might have a partnership or do business or receive funding. State laws typically limit the liability of the members and the board of directors once you are incorporated. And so that is somewhat variable according to the states, but is typically the case. You can get state tax exemptions, for example, sales tax if you're buying office supplies or meeting supplies. You can apply relatively easily for your sales tax exemption once you have been incorporated in your state. And then it's also a gateway to your federal tax-exempt status from the IRS, which has many more benefits we'll talk about a bit later. So I'm also going to talk to you about disadvantages of both. So full disclosure, it also, once you are incorporated, you will have another level of complexity, responsibility, especially around having an annual filing or a biannual. Some states are biannual, every other year, filing requirement to your state. And that is part of what we will talk about on the May webinar when we go into the maintenance of your nonprofit, and typically includes a brief form that you fill out and is especially updating the state on any changes that have occurred. So they'll be looking for things like verifying your name and address and your officers and directors. But it's not typically a high level of any sort of a reporting form. It's just making sure that those key facts about your organization are still up to date with the state. But then, of course, it also takes a little bit of time and money to do all these things, including a filing fee for your original incorporation, as well as that biannual report and fee to the state. These are typically relatively minor fees. I've seen in the range of $50 to $100 is most typical. But also, as your organization grows, some states will have a range so that as the organization gets bigger and bigger, that annual report fee might go up. So just something to be aware of, but typically when you're just starting out, the fees are quite low. So again, we want to be very realistic as well. So it's very true that for many nonprofit organizations in the very beginning stages, you might be starting out and really forming and formalizing and conducting some activities, developing your track record in your community, and it's totally fine to not incorporate right away. You may want to focus on the work first, and that is often what organizations do. So as we saw in the poll, many of you are currently in that stage, and that's just fine. So what happens if you don't incorporate, or if you're not incorporated right now? You may be in this category. And an unincorporated organization can be very much like a corporation. Similar bylaws, you might have similar nonprofit purposes. Differences might be that you might have a different sort of a governing document or organizing document that it could even be called a constitution, or you might have other more informal policies that are taking the place of those articles of incorporation. You also won't have that protection against personal liability. If you're just an unincorporated informal organization, then the individuals involved in leading and managing your organization won't have any protection. And then you also, of course, don't have to be reporting to the state if you have not incorporated and taken on that greater level of scrutiny. But you're still a nonprofit in practice, even if you're not recognized by your state. So next I'm going to talk a bit about becoming tax exempt and also advantages and disadvantages here. And again, this is related to federal tax exemption by the IRS, and organizations that are exempt from those federal taxes are described in specific sections of the U.S. tax code. Another common misconception, people often conflate all of the different types into one. We talk a lot about 501c3. That is what's called the charitable tax exemption. And it allows exemption from your federal, corporate, and income taxes for most types of revenue. There are a couple of exceptions to that that really should be quite rare and would not typically apply to most, but that is something that will be included in some of the later resources that we display if that's something that you're worried about. There's lots of resources about that, but it's very, very rare. You'll also be able to solicit tax-deductible contributions if you're a 501c3 from your donors. So that means lots of terms that can be bandied about. But when you're talking about tax-deductible contributions, that means that an individual that is donating to your organization can take that amount of that donation as a deduction on their own personal income tax return. So if you're in the boat where you're working on your tax return right now, you're probably familiar with that part of the form where it talks about your charitable donations, and you can tally all those up. And if you have donated more than a certain amount, you can take that as a deduction on the income, on your taxable income to the IRS personally. So it is most appropriate for breastfeeding coalitions and most common to have 501c3 tax exemption. So I just wanted to note here that for most of the rest of this webinar, unless indicated otherwise, I will be talking about tax-exempt and 501c3 interchangeably. We're really going to focus mostly on that because, again, the other types are relatively rare and not as relevant to breastfeeding coalitions or breastfeeding community organizations. So a 501c3 organization has to be organized and operated for one or more of these purposes. I've highlighted in red and red bold the ones that most likely would apply to a breastfeeding organization or a breastfeeding coalition. These are also the ones that were specifically called out in USBC's initial filing with the IRS back in the 90s. So that's just helpful to think about. And I'm going to cover very briefly another quick common misconception about the one other type that we see most commonly in our circles in the breastfeeding field is likely a 501c6. The IRS term for these is a business league. More commonly, I see them called a trade association or a professional association. And this is typically an association of persons with a common business interest. and that their purpose is to promote that common interest, not to engage in business where they would be carrying on a profit. They're not, you know, for example, if they're a trade association of consultants, they're not in that trade association in order to do consulting. They are there to promote the interests of consultants to the public and to policymakers. So in order to be exempt, that business league's activities have to be devoted to improving the conditions of one or more lines of business, and that is typically defined to mean the whole industry, so all consultants or all lactation consultants or all nurses or doctors, or to all components of an industry within a geographic area. So it also could be that that particular association is focused on the state of Indiana or a particular city or county. So that's the most common one that we see. Again, a 501c6. I think many state coalitions will often be interacting with different affiliates of 501c6 associations in your states. So you might come into contact with those there, and it's just nice to be aware that they do have a little bit of a different purpose, a little bit of a different structure and requirements than a 501c3, but otherwise they are also exempt from taxes in a similar fashion to a 501c3. So I also put a link here. There's a total of 26 different types of IRS exemptions, you know, everything from social clubs to churches. So if that's something of interest to you, you can find more about all those different types at that link. So a couple of other ways that you can receive tax exemption or be benefiting from tax exemption without individually filing yourself as your organization. Automatic recognition can apply, and that would mean that you're automatically having that status. You don't need to file independently. That is most common with a group exemption. So there might be a parent organization nationally that has state or local chapters, and those state or local chapters are covered by that national organization's group exemption. And so that's, again, that might be a common thing that you see with state chapters that you might be interacting with in your state that are affiliated with a national entity. Churches are another one. Churches have very minimal requirements with the IRS, and something I was quite glad of as a former church treasurer. They have special status. And then also, if you're an organization that does not have more than $5,000 of annual gross receipts, which many of you might be, you are right now benefiting from automatic recognition. You are tax exempt according to the IRS right now. That means you don't have to file federal income taxes. But there are some other things that do apply to you, including the 990 filing. So stay tuned, because even if you have not applied for that, there are some other things that you do need to know about this automatic recognition. If the other primary way that you can be benefiting from tax exemption is by having a fiscal conduit. I think more often we talk about this as a fiscal sponsor or a lead agency, and many coalitions I know do start out or have these types of relationships where they have an organization that's already incorporated and tax exempt, likely an affiliated one with a similar public health type of purpose. And that organization might be administering your funds and performing other administrative tasks. So they could be providing office space, accounting, website, a variety of different administrative services. Every relationship is different, but fundamentally that organization is a conduit for funds in this particular discussion. They're a conduit for funds, and they're allowing your organization to receive grants or contracts money without having to get your own independent tax exemption. So that's another way, and one that we know some of our state breastfeeding coalitions have been using. And so I think another comment I would make about that, That fiscal conduit relationship is often an easy way to start out at the beginning. The lead agency does all that paperwork and filing and can provide other support that is helpful. And certainly we want to encourage folks that if you have that type of relationship available to you, to please do consider using that. That's a very nice way to start out. We also have been hearing from state coalitions that have been having these type of relationships for some years and are getting to the point where they really are ready to go independent. And so that was another part of the impetus for setting up this webinar series. And so when you're ready to do that, that's also something that can happen gradually as well. If you don't have to consider all at once. All of those different components have to drop off. It could be that you go ahead and seek out your incorporation and tax exemption independently and still maintain a relationship with that fiscal sponsor agency for a period of time where they are providing some of those administrative support functions like the office space or other things. You might want to consider not a total break in that relationship, but a gradual move towards independence for your organization. So just something to be thinking about. It doesn't have to be an all or nothing deal. So back to the advantages and disadvantages, and this again is specific to the tax exemption. Of course, you're freed from many taxes by the definition, and again, the donors to your organization can then deduct their contribution amounts from their own personal taxes. You can also apply for grant funds. Almost all foundation or government grants require 501c3 status. There are very few exceptions to this, and so this, again, is really the gateway to seeking out more funding and sustainability for a nonprofit in the long term. Also could have benefits of independence from that control of the fiscal sponsor, and also freedom from any fees that were charged by the fiscal sponsor. Again, this may be something where you negotiate a gradual pathway to independence, but both of these can be meaningful along that pathway. Disadvantages are similar to before. Again, there's that extra level of complexity and responsibility, and here the specific requirement is the annual tax return, or really information return is what they call it, to the IRS. That's you've probably heard of that, commonly called the 990. And there are a variety of different 990 forms that might apply. So again, we're going to talk about that a bit later. And again, this process also takes some time and money. Specifically here, there is a filing fee for your tax exemption originally, and you might also need to incur some fees for legal advice or accounting advice along the way. And then lastly, having your tax-exempt status does set certain limits on your lobbying and advocacy. But again, another common misconception, nonprofits, even 501c3s, absolutely can lobby, and that is going to be the topic of the July Power Tools webinar. So do stay tuned for that as well. I think it's very important to know that, that we certainly all can lobby. USBC does lobby, and there's just some specific things that you have to keep in mind, and some easy things that you can do to make sure that you stay within the limits. So again, just to repeat that in those early stages, it is totally okay not to be filing for tax exemption right off the bat. Many organizations focus on the work first, and as we've seen, that's the case for many of you. So when to consider formalizing? There's just a few considerations here for when you are thinking about starting off down this path of incorporation and tax exemption. You're likely going to be at a place where your group has proven its worth, you have a track record, your group is knowing, and the leaders are committed to staying in existence for the foreseeable future. Not necessarily forever, but at least for the immediate future. Your group plans to apply for grants on a regular basis, or you will be conducting a significant amount of services or providing goods. And if you also may be really considering this if there's no suitable fiscal conduit right now, or if your fiscal conduit relationship is not ideal for you anymore, that could also be a point of consideration. Whoops. Another thing I want to just mention here, any one of these conditions might be enough by itself to convince you to consider that whether you're ready or not to begin to formalize, but you'll want to look over all of the details of your own situation, talk with your leadership, and really decide what makes the most sense at different stages of your organization's development. But one thing to know is that if you apply for your federal tax exemption within the first 15 months of being created, it will be applied retroactively back to your founding date. And then they also the IRS gives an automatic 12-month extension on this, so truly it means a 27-month period of that extension to avoid any taxes for that startup period. So if you know from the outset that you're going to be around for a long time, and that just means that it likely may make sense to apply relatively early or to be having that 27-month deadline in mind. And so that would be 27 months from the date that you incorporate. So just think about that. If you're getting ready to launch into both of these pathways, incorporation first and then federal tax exemption second, you may want to think about from the date when we receive our certificate of incorporation from our state, we have 27 months in order for the IRS to apply retroactively. So just something to consider. So getting started with incorporating, and again, we talk about this Articles of Incorporation as a constitution for the organization. And for all of these things, I'm always going to recommend that you do a little bit of research first. Knowledge is a powerful thing, and we're going to try to, in the rest of the webinar here, provide a lot of quick links and great places to go to make this much more simple to find what you need to know. The bit of complexity here is that when you are incorporating to become an official nonprofit, that varies a bit from state to state. And so you're going to need to get in touch with your own state's Secretary of State's office. Typically, it might be the Attorney General's office, and find your state's procedures. So I've provided a link here that is actually a fabulous directory that takes you straight to the websites of the filing offices. And again, these slides will be available on the Power Tools webpage, and the links will all be live links so that you can click on any of these resources and head straight there. Typically, this office is going to be called the Division of Corporations. Don't be fooled. It might also have a word like the Business Services Division or something like that. I know business typically to us sounds like for-profit. But it does mean you, that they just sometimes insert that word business instead of corporations, but ultimately corporations can be both nonprofit and for-profit. So in that division of corporations, you'll find the forms and information for both nonprofits and for-profits. On that website, there will likely be some FAQs. There'll be different forms, a page with the different forms that you're going to need to familiarize yourself with over time. They may also have some nice guides or manuals. So again, because this is different from state to state, I really recommend looking for those type of things when you get to that website. That can be handbooks. So look for something like that specific to the nonprofit organization. And of course, call these guys. I highly, highly, highly recommend one of the first things that you do is just call them up, especially if navigating websites is not your favorite thing to do, or if you find that the website is not super helpful. Call them right away. Just go straight to the Contact Us page and get in touch with the office that oversees nonprofit, and they will. There will be somebody there who can direct you immediately to what you need to do and where the forms are that you need. So for filing your incorporation, there will typically be some form, very brief, usually 1 or 2 pages, that you fill out and submit to the state with your organizing documents. And that organizing document is a very specific term that is used later by the IRS. So I'm going to use it quite a bit here. There will usually, again, be a small filing fee. And that will go in with the form as well. Often you can do these online more and more, but different states, again, are at different stages of their website development. So I've certainly been seeing more states having online filings in the last few years. USBC actually has to file in several states just because of the way that we are set up and the way we do business. So I've been seeing a positive move towards making this more user-friendly and accessible. So that organizing document is typically going to be called your Articles of Incorporation. I know we've even been working with some states recently where they've got different names. So you might see Certificate of Incorporation, you might see Charter. If anybody's seen something different, please feel free to chat me because I would love to know what else your states are calling these. And just a word of caution about this, be aware of filling out just a form. That sometimes they will allow you just to fill out a form and answer 7 questions, and that's it. That may seem like it's very simple, but that form may not include all of the language that you're going to need later for your IRS tax exemption. So if you're thinking about doing IRS tax exemption, beware, and we'll talk about that a little bit more in a moment. But the IRS does require that certain language is in this quote-unquote organizing document, and there's 2 specific things they require, both a purpose clause and a dissolution clause. And again, we'll talk about this a little bit more later, but this is actually the part, the link to where in the IRS form it describes these things is this part 3 of the Form 1023 instructions. So just be aware of that. So what is going to be in your Articles of Incorporation? Again, relatively simple, your name of your organization. They will also often have a searchable directory type of deal where they will want you to search and make sure that the name of your organization has not already been taken up in your state. So they will not typically let you register a name if that name has already been used. Now that, of course, you could have different names across different states, and that can certainly happen, but within the same states, that won't be allowed to happen. And hopefully we don't have people trying to register, the Illinois Breastfeeding Coalition in Ohio. That would be a little bit strange, and so certainly that will play itself out. You'll also have your mailing address where you're headquartered, and again, that purpose clause that you will need to ensure includes that IRS required language. Also recommend that you state your goals and your purposes relatively broadly. You don't want to get way too down in the details here in this sort of constitution level document, because you want to make sure that you provide enough room for yourself to develop and change direction in the future. And again, the dissolution clause and how you will distribute assets if the organization were ever to go out of business. And that has some very standard language that you can pull from other examples, so it's not anything too scary. And then lastly, you'll typically have an amendment clause. That specific procedure of how you would amend your articles is usually in here as well. So I want to take a quick time out to just talk about this governing document hierarchy that we have become very aware of at USBC, quite a bit by actually doing the wrong thing. So it's always been instructive, I've found, to tell folks about our experience at USBC, because it's helpful to know and to watch out for these as you are moving forward with these governing documents. So the most important piece at the top here is that state nonprofit law, and it is often its own separate universe, because that state nonprofit law rules everything for you as a nonprofit in your state. Your organizing documents, your governing documents, can't be inconsistent with your state law. So it's really important to become familiar with your state's nonprofit law, and again, those websites are going to typically have links and documents and resources about that on when you get to your state office. Then underneath that, in the blue triangle, these are the different governing documents of your organization. And so the Articles of Incorporation is at the top, followed by your bylaws, and then below that, any board-approved governance policies that you might have at your organization. And this is truly a hierarchy. Each of the documents on the lower rung has to be consistent with those above it. And if it's not consistent, the higher rung will prevail. So for example, let's say that you write into your bylaws a method of electing your board of directors that is not in alignment with your state law. Well, guess what? If that were to go into a situation where it were challenged in any way, the state law would prevail. So, same thing if you were to have information in your articles and your bylaws about procedures for amending your bylaws. Let's say you have a clause about bylaws amendment in both your articles and your bylaws, and they're not consistent. You accidentally talked about it in both places, and oops, now one is different than the other. So again, the higher rung prevails, so the articles of incorporation would prevail there. So what does that mean? Considerations when you're beginning this articles of incorporation process, you want to start thinking about this from the very beginning, and the recommendations that we've put together from our experience. One is, again, to be sure you've really thoroughly read your state law about what your nonprofit articles of incorporation must include in them. And then we recommend that you don't put more detail in the articles than you absolutely have to. Why is that? Because, again, if you have extra detail in your article of incorporation and later you want to change that, it's a little bit harder to amend your articles. So you'd have to do actually typically 2 different steps. You'd have to follow your own procedure to amend the articles internally, whether that's a vote by your board, your members, whatever that is defined as. And you would then have to file your amended articles with the state and likely pay a small fee again. So if you want to avoid that circumstance, then it's easier to be more broad in your articles at the outset. Make sure you include the stuff the IRS needs, but not more detail than you absolutely have to have here. Again, then amending your governing details in your bylaws would not require filing that amendment or paying the fees to the state. So having more detail in your bylaws then is typically preferable, because you can just amend those according to your own bylaws amendment procedure, and you don't have to deal with the state. And as I was saying on the previous slide, if you have extra detail that conflicts between the articles and the bylaws, the articles is going to override. So to avoid that inconsistency, again, if you keep your articles relatively high level, nothing more than you absolutely have to have, then you can avoid that type of a conflict in the future. Another thing that is a common point of some consternation when one first encounters it is what does this registered agent thing mean? And you'll also typically find this on most of the state filing forms. They will ask you to designate who your registered agent is going to be. So what does that mean? Your registered agent is going to be either an individual or a company that will receive your important legal and tax documents. So that could be a service of process if your corporation is sued or summoned to somebody else's lawsuit. It could be the paperwork from the state for your annual renewal. And this is going to have to be a business address. It can't be a P.O. box. It has to be an actual business address, because the intent in corporate law is that you're ensuring that there is somebody during business hours who is available to take that key service of process or important legal document when it is delivered. So again, it can either be an individual or a service like a lawyer. There are different companies that provide this exact service for an annual fee. Many startup nonprofit organizations designate a particular individual that is affiliated with the organization. A leader or one of the founders is often the registered agent in the early years, and that is totally fine. But just be aware that that person is going to receive that typical official paperwork and any sort of a service of process would be delivered to that person's address. And that's why they are designated. So you may want to think about who is it best to put in that position. And then ongoing, once you have filed for your incorporation and you receive that certificate accepting and stamping and giving you your official incorporation date, you will have some ongoing requirements for usually annual, sometimes biannual reporting. And again, we're going to talk about that in a lot more detail on the May Power Tools webinar. So next section then, we're going to talk about IRS tax-exempt status and what do we do next. Once you have your own corporation, then you can move on. And again, if you do so within 27 months of your incorporation date, then the IRS will apply your tax exemption retroactively. So this is the point where you might be thinking about that 27 months. One of the first things that you're going to do is you're going to have to obtain an EIN. That's your employer identification number or your federal tax ID. There's no filing fee for this. You can actually do it online now and receive it immediately, and I've put the link here. So it's actually very simple. You will also need this in order to open a bank account for the organization. If you are accepting funds, you'll typically need a tax ID for your bank as well. A really common misconception here as well, this employer identification number, when you get a letter, and you will receive a letter from the IRS giving your tax ID on paper, that's not the same as your tax exemption. So often I will see folks misunderstand the different letters. There's a different letter that you'll receive when you actually achieve the tax exemption. So that's an easy and early step to get your EIN. And then again, always recommend that there's some research that you do first. There is a very handy 17-minute IRS online mini course called Applying for Tax Exemption and Overview. If you are more of a video person, that is a nice resource. And there's some other resources as well that will show that have mini courses, online courses from the IRS themselves. And then these are the key publications. You know, the IRS always has a particular number they assign, and so you'll start to become familiar with this 557, which is the tax-exempt status for your organization. Publication 4220 is in a bit more of a brochure format, so that might be one that could be a nice handout to give to your board or your membership to help inform them. It's not quite as in-depth. And then the actual form that you complete to file is the 1023. And I've put the link at the bottom here to access all of these with one click. That web page at the bottom has the key link. So here's where what I was mentioning earlier about those special requirements in your organizing document. To qualify for exemption, your organizing document, that's your articles of incorporation, has to limit the purposes of your organization to one or more of those set forth in Section 501c3, and we looked at those earlier. That was where the typical ones might be the education, charitable, and scientific. Not expressly empower activities beyond those, and then you also have to permanently dedicate the assets to those exempt purposes. So again, it can't, the profits can't go to individuals or to anything else but the exempt purposes. Form 1023 is, again, a form that you can download online, and it does have a filing fee. I've put here the most current numbers. These have gone up by, I think, just $100 for each level in the not-too-distant past. But if you are a smaller startup organization with less than $10,000 annually, over a 4-year period, and if you're brand new, then you may not have a 4-year period to even be counting, then the fee is $400. If you've been having more than $10,000 annual receipts over 4 years, then it's $850. And that's a one-time fee that you complete when you submit your application. You don't have to then submit any sort of an annual renewal fee. This is just that one time. And again, the 27 months deadline, in order to be treated as exempt from your date of incorporation, your date of formation, you have 27 months to apply. So what happens next? This is where we get into a bit of deviation depending on how much information the IRS perceives that they have received, and if they might be looking for more information about you, there's different tracks that they might put you in. So rather than try to explain that, I have put a link here to this great page that is on the site that's a little bit harder to find, but is called Where's My Exemption Application, and that is a great place to go and can direct you of what to do and how to figure out where in the process you are once you've submitted. And then once you actually receive that final IRS determination letter, it's a really, really key piece of documentation for you. So it should go in your permanent records, and really even to recommend that you scan a copy, because you'll be giving it to many folks, funders, foundations. That will be something that you're asked for quite a bit along the life cycle of your nonprofit. So getting help. So this is obviously a relatively complex process to complete that form. There are many publications, as I said, and online courses from the IRS that can help to navigate that, but there are other ways that you can seek help as well. And this is often a struggle for small and startup nonprofits, and there are different resources that can help you with this. You can look, of course, for professionals in your own network who might donate their time or at a reduced cost. You might also have a legal aid organization in your community, and they will likely have a list of lawyers that could do pro bono work or do this type of volunteer work. A couple of other resources that we have found, the Foundation Center has actually a directory of nonprofit startup resources, and there's also this organization called the Pro Bono Partnership, and they have lists of resources for folks that can work pro bono. So we recommend tapping all of those different types of resources. Another one that I've seen more and more recently as nonprofit management is becoming a master's program in more and more different universities, and a newer area for having a master's degree, but a really exciting one to see folks have that deeper level of training. Some of those nonprofit management institutes at universities do have resources that they provide to nonprofits that are starting up as well. So check that out if there are universities in your area or in your state. Search for terms like nonprofit administration or nonprofit management, nonprofit governance on their university websites, and if they have an institute, they likely will have some resources as well. And again, that's even better because it's specific to your state. So again, with the laws being so state-specific, that can be a great boon to the process. So once you have achieved your tax exemption, there are these different requirements and responsibilities that will come into play, including record keeping, that annual filing, the 990, which we're going to talk about in a moment, and then disclosure. Nonprofits are required to make their IRS filings available to the public upon request, so that's primarily what the disclosure requirement is. There are also some great training courses, again, easy online courses at the stayexempt.org. That's actually an IRS-sponsored site, but one that I have noticed is not as easy to find from the IRS website directly. So really wanted to highlight that as a resource. And then there's also this publication 4221. This is another one of those that is more in the brochure format, so might be, again, one to be useful for a broader audience that is working with you on your nonprofit startup. So the last piece of the three objectives, and then we'll talk just a quick bit about the 990, and then I want to make sure we have some time for discussion and questions, is the state charitable solicitation registration. And so this is something that is also not as well known, but is not something to be afraid of either, because there are lots of resources here as well. So I'm going to talk just a quick bit about it, but then we're going to dive into this even more on the May webinar, which is focused around compliance and filing and maintenance once you have started up, because I think again the 990 deadline being May 15th is a bit more pressing than this topic for today. So I'm just going to do a quick overview of what this is all about. So the states also, many of them, not all of them, require a charitable solicitation registration. So that would come into play if you're a nonprofit organization and you are soliciting funds, and they will define this as funds from donors as well as grants. So if your state has a charitable solicitation requirement, and it's something like 33 or so that do, they will typically want you to register before you solicit any contributions. If you've already been soliciting contributions and you didn't know about this, don't stress. Just go ahead and file for it at the next, at the appropriate time. Once you have incorporated, go ahead and file for it, and the world will not fall down upon your head. But it is something that once you're aware of it, certainly you should comply. There will be some additional requirements if you have activities around paid solicitors or fundraising consultants, which again is probably not applicable to most of us. In fact, because of those additional requirements, we have been very circumspect about how we consider and how we structure our fundraising activities at USBC. And so that's something, again, I'll talk a bit more about that on the May webinar, where we get into the details of these compliance forms. But it is something that you can certainly avoid those additional requirements, especially in the outset, by being careful about how you conduct your solicitations. And then you'll also typically have to file an annual financial report, and what they typically ask for this is just that you include a copy of your 990 filing with the report form. So it's not any special additional form. They use the IRS forms, even though this is a state-level filing. So I've also put here a link to this list of the state offices that regulate charitable solicitations. So that will be a quick link that takes you directly to the place for your state. And typically there is a state law that is dictating the requirements of exactly what they're doing and how much the fee is and what the form looks like. Again, it's all dictated by the state law. So that NASCO list, which is the National Association of State Charitable Offices, they have that resource of the list, as well as some other resources that are helpful to nonprofits that are navigating this as well. So much help in the universe around that. And I would just note around that state charitable solicitation requirement, if you think about it this way, a national nonprofit organization that is fundraising from all 50 states actually has to file for that in all of the states that require it. So I think I said there's about 33, I think was the last count. So they have actually gone so far as to create a unified statement that can be used to do that across states. So even doing it within one state has had a lot of universality applied to it to try to make sure that it's relatively easy to do across states as well. So I want to then, again, just end by talking a bit about the Form 990. This has undergone some changes in the last few years that you may have even already knocked up against in your nonprofit or other nonprofits that you work with. Because for the first time ever, just a couple of years ago, the IRS actually revoked nonprofit or tax-exempt status for a whole slew of organizations because they had not filed in more than 3 years. So it's just something to be aware of. The requirement, if you are small, is relatively simple, as we're going to look at in just a moment. So this is the current breakdown from the IRS website of which form you're required to file based upon the size of your annual receipts. Again, I put the link here that takes you straight to the web page that has the links to these different forms, and as well as this chart. The key note here that was also very interesting news to us, especially over the last couple of years where they've started to do revocations. Even if you have never applied for tax-exempt status, or if you are pending, you have applied and you're waiting for it, If you have been incorporated in your state as an official nonprofit organization, you are required to file. The only organizations that would be exempt, again, are churches. Churches have it quite easy, and some other very special categories that are likely not going to apply to you as a state coalition or a breastfeeding organization. So what does that mean? Oh my gosh, the deadline is likely May 15th for you, so do not panic, because I'm about to show you it's really, especially if you are under $50,000 in gross receipts, which I think most of you likely are, it's very, very simple. So a few other key details, and I'm going to specifically talk about those for the e-postcard. Again, if you're under $50,000, that e-postcard is due by the 15th day of the 5th month after the close of the fiscal year, and that's the same deadline for the other 990 forms as well. So if you have a typical December 31st year end of your fiscal year, then your deadline is May 15th. If you're not sure what your fiscal year is, typically that is something that is stipulated in your governing documents, likely in your bylaws, because again, that makes it easier to change if you were to change your fiscal year in the future. So if you're thinking about, I'm not sure when that is, it's most likely December 31st, and check your bylaws if you have them. If you don't file on time by May 15th, they might send you a reminder notice, but there's not a late penalty. You're not going to be getting, hundreds of dollars of fines or anything. So again, don't stress. They're not trying to put nonprofits out of business. They're just trying to make sure that they know which nonprofits are still active and that they are doing what they can to protect the public and to enforce some different regulations around the larger nonprofits. So if you fail to file anything for 3 consecutive years, you will automatically lose your tax-exempt status. That's if you have it. If you don't yet have your tax-exempt status, which I think most of the folks on this webinar don't, then there's not anything to stress about here. However, it would be a good idea to still file and go through the good faith effort of doing that again, because they are saying it is required whether you have achieved tax-exempt status or not. They want all nonprofit organizations that have been incorporated, formally incorporated as an official organization, they want you to file. So if you're in that strange bucket of we haven't applied for tax-exempt status or we are pending, and you try to go and do the e-postcard, you're probably it's not going to recognize you. So what they've actually said is that you should have an officer of the organization call this number and request to be set up to allow for filing. And then the e-postcard, again, is an online, very brief postcard type of a filing that you can do. But if you try to go and do it without being set up, if you don't have your tax exemption yet, you'll run into a little snafu, and so they do ask that you call this number. So what is the 990 postcard going to ask you for? This is totally it. The entirety of this slide is all you're going to have to do. So everybody should now take a deep breath and breathe a big sigh of relief, because it's very simple. It's just your organization's name and address. A website, if you have one, was another thing but not required. Your employer ID number, which if you don't have one yet, you're going to need to get it. But remember, that was a quick, immediate form that the link was a few slides ago, and it was a very simple thing to do. In fact, when I first went independent back in 2008, I got my EIN number, in probably 10 minutes, and it was immediately emailed to me. So very quick and simple to do. You'll have to list the name and address of at least one principal officer of the organization. So that might be your treasurer, if that's the person who is typically doing these type of filings. Might be your chair. Those are most likely. You'll have to define what your tax year is. So again, if you don't know, look in your bylaws, or you may need to specify that in your bylaws. And then the answers to 2 very simple questions. Are your gross receipts normally $50,000 or less? Is that still the case? Yes or no? That's it. And then, have you terminated or gone out of business? Yes or no? And literally that is it. So it's not a horrendous thing at all or something to be scared about. But again, it is a good idea to go ahead and do this postcard, this e-postcard, so that when you do file, or if you are pending tax-exempt status, that they see that you have been complying and that you have been in good faith doing what they would like to see. So, and you can see even by the questions that they're asking, a big part of what they're trying to do here is just to know which of these nonprofit organizations in our universe are still in existence. That was a big part of why they did the revocations a couple of years ago and did a whole batch of all these organizations that we haven't heard from in more than 3 years. We're going to revoke them, and if that gets their attention because they still exist, then we'll find out. And then many organizations that weren't paying attention or didn't know have then had to go through the process of being reinstated. Or if the organization really was no longer in existence, then the IRS knew that they had revoked their status and they were just able to inactivate that status. So that's a big part of why they're requiring this now. So again, here's the link for the filings, and there's also a great FAQ page embedded here that has even more different types of details about what if this and what if that. That has a really great information, but it's just a little bit harder to find. So look for that FAQs link on that page. A couple of other helpful resources. This is the National Council of Nonprofits, which has in many states affiliates that have specific information and resources to those states. So that's a great place to look. They might have examples of state-specific bylaws or more information about your state's requirements that can be helpful to you. The Foundation Center also has this grant space website, and they have a lot of different resources there. This is a link to their knowledge base that has some different articles and resources around starting up on nonprofits and different governing requirements. So I'm going to stop there, and we have even a couple more resources that we'll share at the very end. So don't run away. But again, the slides and everything will be posted on the website immediately after this session. So you'll have all of the links and resources available. But in the meantime, if there are questions or you have anything to share from your own experiences, please do chat into the chat box, and Kinkini and I will do our best to navigate these. So let's see.
Thank you, Megan. We have a lot of questions.
I see. Yes. Okay. So let's see. The first one that I see here is, can a public health department be a fiscal conduit? And I assume that question is for a breastfeeding coalition. I guess it's a bit of a yes and no. I think what is typically meant by a fiscal conduit is that the fiscal conduit or the fiscal sponsor is a 501c3 organization that can receive monies that are intended only for 501c3 organizations, and then pass those through to the nonprofit organization that is being sponsored. So in that sense, a government agency, public health department is not what is typically meant by that. Usually a fiscal conduit would be another nonprofit organization, so that you're really having that benefit of the tax-exempt status. I gather what you might be getting at, though, is that the public health department might be a conduit for funds anyway, and I know that's often the case with state health department funding and partnerships or contracts, grants to state breastfeeding coalitions or community organizations, and so that absolutely can happen. But more likely they're not a fiscal conduit in the normal sense of what that means. Let's see. There was a question about the types of sales that organizations could have of products, and that could again be products or services. And so, on the services side, your organization might be providing trainings, conferences, webinars, On the product side, it could be that you create and sell educational materials or publications, promotional products. Like I know some state coalitions have different breastfeeding-related posters or magnets or different things that they might sell. That would be an example of a product that that could be sold. So here's a really common question, and there are many folks who are in this boat. So if you've already filed with the state and didn't include the IRS language, how do we remedy that? So really common thing that happens. And so it's not a hard thing at all. What you typically need to do is to go to that state agency website where you would have found the information about the initial incorporation, and there will be a form that is about filing an amendment. Usually it'll use the word amendment to the articles or that organizing document, whatever it's called in your state. There will usually be a small fee, $50, something like that, to file that form. And you will typically need to file it with a copy of your revised articles and the fee. So when you revise the articles, though, because they already exist now, you filed your original articles, you're going to have to look at what did you say in the original articles that your amendment procedure was. So it may be that you can amend your articles by a 2/3 majority vote of the board or by a majority vote of the membership. That's going to vary depending upon the structure of your organization. So, so check out what is the procedure that you set in the original articles. You'll have to revise the articles to create the version that includes those IRS clauses that they require. So you'll have to define your purposes and the dissolution clause. And then you'll have that go through your process of the vote, whatever you required your process to be for amendment. And then once it's been officially approved by your organization, then you just file it with the state and with that form and pay that fee, and you're done. I believe the IRS does require that official acknowledgement from the state when you're submitting your Form 1023. They're going to ask for the official documentation from the state that your articles have been accepted. So you will need to go all the way through that process and get that acceptance notification from the state agency. So really good question. That's something that we see many folks in that boat, but that's, again, part of why I hit that so hard today to try to prevent folks from falling into that little detour if you don't have to. So we have a couple of questions about sample templates, and absolutely what we're actually going to do on the web page for the Power Tools, I'm going to put a link to USBC's articles as well, because it does, of course, have the lawyer-approved dissolution and exempt purpose language in it, so that you can benefit from that. And feel free to totally lift that and put it in if that's helpful to you when you're writing your articles. So I'll post that link right next to the one for the slides for today. Let's see. So let's see. Is there an online fundraiser? Is using an online fundraiser like Kickstarter or Fundly, I guess that is the name of another one. I've heard of Kickstarter. I haven't heard of Fundly, so I'm going to assume it's similar to Kickstarter. Considered to be an outside fundraiser by the state. So I think this is specific to the state charitable solicitation registration. I don't believe so. I will do a bit of additional research into that for when we talk more about charitable solicitation reg on the May webinar. What they mean by those additional requirements, it's kind of like, think of it like lobbyists. So you may be familiar with the fact that if you are a lobbyist, you have to go through all of this rigmarole of registration with the federal government and registering and reporting on all the different things that you lobbied for, and it's actually quite quite a lot of paperwork for lobbyists. So this is a similar thing. The states have requirements for if you are a professional fundraising consultant or a professional fundraising organization, your state will typically have special reporting and registration requirements for those entities too. And truly, I think, again, it's for a couple of reasons. It's partly to protect the public, right? They're tracking these people who are in a position of raising funds for nonprofits that are tax deductible. So they're, there's a government benefit here, and they're protecting the public and the reputation of that that nonprofit tax deduction. So those folks have to file separately for their own registration. And so if you are using one of those folks in your fundraising, there are some extra reporting requirements on the charitable solicitation form that you have to define. I'm working with so-and-so and tell them about that. And so it's just, again, it's not a laborious thing. If you're working with somebody like that, then they will be able to help you with that filing, of course. What we've tried to make sure at USBC is that our staff people are not falling within those definitions, right? Because the last thing that we wanted is to have staff people having to file with all 50 states in the nation and having all those separate reporting requirements. So that's really the key. If the person doing fundraising is an official employee of your organization or coalition, they do not count. They don't fall into those extra requirements. But if it is a contracted person, they might. And so that's where you have to be careful. So we'll talk more about that on the May call and actually look at the examples of what those questions are on the form. But it's just, think of it like a lobbyist, extra requirements for a lobbyist. Okay. I wish I could hear your voices in asking these questions because it's hard to do this way. Let's see. There's a question about I think this might be a very specific one to this organization. We have an EIN, have not incorporated, and we are not tax exempt. So I'm not sure if there's a specific question here, Veronica. If there's more that you're wanting to ask about it, can you chat me again? The specific question that you're asking. Let's see. There's a question about could a university be a fiscal conduit, public or private? And yes, absolutely, a university could be. Again, I think it's more likely to be if it's an organization, if that university is in a situation where they can accept grants for, on behalf of the coalition, then that's more likely to be beneficial to you, because that's really what you're trying to do, is to have a conduit that can accept that money and pass it through, usually with a a percentage, a small percentage, to cover their costs of doing that administration. Let's see. We have, I think this is a comment, a story, this is a good one. Once you get your organization established as a nonprofit and tax exemption, don't let it lapse. It's a lot of trouble to get reinstated. We just did our first maintenance filing after getting reinstated from several years of lapsed filing, and it was unbelievably easy to do the maintenance, which that matches my experience too. Thanks, Vicki, for sharing that. Okay, here's a additional question on the topic. Okay, so here's a case study here with a specific question. So the organization has their EIN, but they have not incorporated or gotten tax exemption. They don't have articles of incorporation or bylaws yet, and just starting up, restarting themselves more formally. Would they have to file their 990? And they think they made about $5,000 last year. So my understanding from our talk with the IRS is that if you have not incorporated as an official entity. If there is no legal entity yet in existence in your state, then you don't have to file the 990 postcard. But it's a little bit interesting that you got an EIN. So that's a little bit of an interesting nuance. It sounds like you might have gone ahead and filled out the online form for the EIN, although there isn't technically a legal entity in your state behind that EIN. So that's a tricky one. I think what I'd like to do for that one is actually chat with the IRS folks. We did speak with them last year about a few different nuances of if this, if that, but let's ask about that offline and find out, because it might be that just getting that EIN doesn't put any sort of requirements upon you, which is what I'm thinking. But I want to make sure that, since clearly once you get your EIN, you are on the radar of the IRS. They know you're there. But there's not a legal entity yet to exist in your state. So very good nuanced question here. Okay, let's see. I think I have another one, and then maybe this will be the last one. And then I want to make sure I have some time to show you a couple other resources, because there's some really good ones as well that are coming up from our lawyers that we use at USBC. So this is a story. An organization has been in existence for a while with all the funds in a bank account under the one board member Social Security number, since they didn't have an EIN yet. Once they finalize their nonprofit incorporation, which is pending, and get their EIN, can they just add the EIN to the bank account, or do we need to do something else? So that is also a really good question, and one I have seen many times. I think the key there is to talk to the bank, because it's very likely that what you have right now, if it's just under one individual board member's Social Security number, it's probably a personal account, and it may behoove you to switch that into a small business type account. You know, again, don't be fooled by the word business. Most nonprofit organizations would fall into the category in a bank account of a small business account. So I would take that question to your bank. Again, banks are a little bit differentiated state to state of what regulations they have to follow, but it might just be that you transition to a small business account and set that up with your new EIN once all that's set up, and then you just can transfer the funds. Is the most likely way that would play out. But also a very common thing, and really a good development, because especially if you're getting to have more and more funds that are in the hands of one individual, that is a risk, not just for the organization, not just from the perspective of trust in the individual, but also from the perspective of that individual. They don't want to be in that situation of responsibility for those funds without any sort of limitation on their liability or backup for that. So a good move to make. Okay, so we're also asking again, will the slides be available? And yes, we're going to post them right after the webinar ends here. We'll put them up on the Power Tools site, as well as, again, the link to that Articles of Incorporation example that we have for USBC. So folks can, again, feel free to steal shamelessly the exempt purpose language or the dissolution language that we have, because that was, again, handled with our fabulous lawyers. And I'm going to show very quickly a couple of resources from the lawyers that we work with at USBC. So the legal firm, the law firm, is called Venable, and they have actually a whole section devoted to nonprofit organizations. And this is an upcoming webinar that I saw that was obviously very relevant to some of the things we're talking about today. Ask the Expert, Jeffrey Tenenbaum, who's their chair of the Nonprofit Organizations Group, is going to do everything you wanted to know about nonprofit tax law. So I highly recommend this. The registration link is also here. And it's open to anyone. You don't have to be a client, although, again, these are the lawyers that USBC has worked with for several years. Also, even more resources from Venable. These guys are fabulous, and they do a variety of different nonprofit legal webinars, and all of these recordings are up on their website. So I've put a couple of highlights of recent ones. They had one about nonprofit bylaws. They had one just a couple months ago about work and family, family-oriented employment laws, and this one includes breastfeeding. And they have some great stuff about keeping up with technology, social media, cloud computing. This one has specifically information about electronic contracting. So great resources. And then you can also sign up at this link to receive their newsletters and articles and alerts so that you get those into your inbox. So again, all free. Don't have to use their services. You can get access to these. So I'll just end with a couple of quick additional reminders. These are the next two sessions that we're going to do, both of which I think I gave some strong foreshadowing to today for May and July topics. And then coming in September and November, we'll be bringing in the Foundation Center, who did do a pre-conference workshop at our last conference, and they're going to come in and do a brief webinar version of that. So if that's something of interest, we hope you'll join that one in September. And then we're looking also at some strategic communications topics with a speaker to be determined for that one in November. You're also going to get an evaluation survey when the webinar closes, so we hope you'll also fill that out. It's just a quick 5 questions, as well as a place to tell us what other topics would be helpful to you for future Power Tools webinars. And then last but not least, just a reminder of our Coalitions Conference coming up in August. We will also have different variations on some of these Power Tools topics that will be part of the conference program as well. So look for that. And of course, right after the conference ends on Monday the 4th, we'll have our 2014 Day of Action. So folks will go to the Hill, and again, we hope that you'll join in for the July webinar about nonprofits really can lobby, so that everyone is fully prepared and informed for the Day of Action in August. So thank you for all that you do, and we hope you will share this webinar, and feel free to access the resources and send us any other questions and thoughts that you have for the future. Thanks so much, everyone. Take care.